it can get so wildly bearish, and you're seeing some symptoms of that. But at the other hand, it could tip quickly the other way in a market like corn with the way the demand's been up front.
Hey, welcome to Hedge Heads, where we discuss the commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. Well, no one knows where the market's going. We're not afraid to share some ideas. I'm Ryan Tungseth. He's Jon Prischmann. Well, John, we talked in our last episode that we would know the results, and we both wish that we would have clear results of the election. And we do know that, but there is zero clarity in the market.
Yeah, I really thought if we had something decisive one way or the other, that we'd have this path forward in the commodities, and it would be really easy. And I couldn't have guessed worse. I mean, on the night of, I made some money short beans with the idea that if he was elected, beans would be on the defensive a little bit. And they were, but that was very short-lived, even that. And I got all of it. You know, I didn't get the low, but I got all of it, got out. And then by the next day, it was up. And it's only gotten more confusing since that happened. Like, it's all complete chaos in the markets with everything doing seemingly whatever it wants to do with however it reads whoever won what, you know. And I know that sounds complicated, but that's what it's doing. Like, gold and silver are trading that it's not going to be inflationary, and they're going to rein that in, and they're going down, which makes no sense. If you have a good economy, gold and silver are going to be going higher. Then the U.S. dollar's moved up very, very, very sharply over the last couple of days, especially, and then the long-term interest rates have shot up. Went to the summer highs where we're 7-something on a mortgage rate. And then corn is heavy bull spreading with not a lot of news on the way down. Beans have been all over the board. Wheat, that's a consistent one, just down. That's not uncommon. Unless I short it, of course, and then it's the little rare window, but punishingly straight up every day. Wheat's the only one that's made any sense to me since we've saw the numbers. It's really hard to navigate markets.
Have you looked at the oats chart?
Throw the oats, that's already confusing. And the oats just been in a free fall. I love how when it goes up, everybody says oats knows, here comes corn and beans next. But then when on the way down, that saying disappears really quick. I did notice that on Twitter. Everybody pointed out that it was going straight down. I don't think oats knows anything. I think every market's just got its own personality. It's been hard enough the way it is. It's always hard in the markets, but now it's like they've kicked it up 10 notches. Like, let's just randomly move stuff around, and even within the same thing, like corn, let's just sell December 25 corn every day for some reason and get it down 6 or 7 cents out of the blue, which is what's been happening. So really odd corn structure. You hear this rumor where there's no room for any corn left, which is the camp I'm in. There's just corn everywhere. We're going to be out by spring or summertime, the spreads are saying. Very confusing in corn, very confusing in beans, very confusing in meal, super confusing in soybean oil. Getting back to wheat, the only one that's actually making any sense. I mean, how do you read it?
Yeah, well, I don't know. This soy meal is at what? Trade war lows? I mean...
Yeah, COVID or whatever in 19.
Lows, yeah.
It was pointed out by somebody on Twitter that it was near $10 near the old, really bearish low. Now, whether that's they see more biodiesel and Trump winning, that's the way it's going to go. But then now today with his EPA hire, or yesterday, he's not Lee Zeldin. I don't know that name other than I wrote it down. But he's not known for his green leanings at all. He's kind of so that's where soybean oil really had the issue today. Where that sold off on the best fundamentals argument, the whole grain complex, but that's had a huge sell-off. So what does it all mean? I guess that's what we're driving at. I don't think there's any clarity. I think you got to take it day by day. These are some of the hardest markets that I've ever seen.
Yeah, I think you talked about corn and having no place for a huge crop. There's obviously also a whole lot of demand. At least Mexico seems to be buying every single day.
Yep.
So it could definitely all be going out, but we also feel like there's going to be a whole lot of it around too. And then what's South America weather going to do? And
it's a very rare market where we could actually go up right now. And what are the funds? They were short 350 million or 350,000 shorts contracts. Now they turned it around and they're probably around 70 to 100,000 long. That's 450,000 contracts that are bought in a fairly short window. And normally something like that would happen on a weather scare or something fundamentally changing. That just happened out of the blue on, just like I say, these shifting attitudes. So what do you do with that? Well, they're long, so they can continue to add and go long. But, at the same time, the South American weather could not be better. But it's way too early to call that, that's for sure. You're in November, but you've gotten great moisture going all the way through November. It started. You got 2 weeks of what I would say is some of the most bearish weather I've ever seen for South America. It's like a bullseye. It's going to rain for 2 solid weeks there, right when they need it. You won't be too long before they're saying too much rain. But it is a sandier soil, and you need to keep on raining. But it is the rainforest, and it usually does. So the way it's starting off would have me very scared. And then you have the looming trade discussions is a nice way to put it.
I like it.
That are probably headed this way. And where is that going to happen? Mexico, I would guess, would be where it would start. That's just me guessing that. But I don't know that their president, which is a woman, first woman elected in Mexico, and then Trump. I think she's very green. A lot of green policies. So they're going to clash immediately, which they already have. I think I heard that she snubbed them initially on election night, but then you read today where the call was very cordial. Who knows? I mean, good luck sorting that out. I mean, who knows what their feelings are? I'm going to guess with the border issues and what he ran on, immediately that's going to be a deal with Mexico. Like, whether they cooperate and they're fully on board with the plan or not, that's going to be the discussion. That's probably why Mexico's buying all the corn, or all this pre-buying in corn. So what looks to be bullish short term but is it real or not? Who knows? I mean, it's, again, throw it on the pile of some of the hardest markets to figure out that I've ever seen. But you got to go back with our carryovers, which did change on the Friday report. You go with that carryovers and what we look to plant next year with South America. I mean, it's really hard to get really fired up about a lot of upside here. Like, the biggest argument is the farmers put it in storage. It's going to be hard to get it out of storage now. I mean, that's sort of short-term bullish, and the market's trading that. But really, is that a good strategy longer term if it's really front-loaded demand and there's going to be none on the back end and everybody's got it in the bin? So I don't envy marketers this year. I had a great plan for December 25 corn. As I've spoken with that, I tend to go the year. If you did your marketing, you already got this year taken care of, or more or less taken care of. So I'm on to 25, but 25 offered no opportunities. If it's the weakest contract in the board has been that December 25 corn, which would insinuate there's so much corn around, we don't need any extra acres next year. So you get these cross currents. It's impossible, to read and trade profitably longer term. So I'm going shorter term. I decided I'm getting flat, going to take it day by day, and I already felt less stressed just doing that today. Let's just try to make money today. Worry about the long-term plan later. So I'm moving more towards a flat position and just taking the trade day by day, and I think that people are really going to respond to that.
Well, and when we've talked about marketing, this is an excellent example of, it's easy to say there's hard and fast rules, like you should have 60% of your next year's crop marketed and 30% of your 2 years out crop marketed and 10%. Yes, in a perfect world, maybe.
Yeah, seasons do work, but not that good.
No, there's times like now, where you do need to go to a day-to-day strategy, that there maybe isn't a long-term thing that makes sense to do right now.
Yeah. So the biggest decision we're going to have is that we put this corn spread on that protects the bottom, and then the upside's capped by selling a couple extra calls. This was put on a long time ago. Now, it's been on both sides numerous times. The floor is somewhere around 430. But now I feel like the hardest part to this is, yes, great, we got to see more of what was going to happen in the corn. It looked like it was going to be the worst ever, and now it's not. We got to see that. Other guys have marketed, and there's no way of getting that back unless you re-own it. But the hardest part, I think, going forward is knowing what to do with that. Now, yeah, we come up 30 cents, and now what?
Yep.
Do we have 30 more to go? Or is this it? Do we market our physical corn and then keep what we have on for a hedge for next year? But you start doing stuff like that might not turn out for you, and it's not the same crop year. So it hasn't gotten any easier, even though it was a good hedge. It's still very complicated to know what to do with corn. I mean, I'm going back to just taking it day by day right now, and I think that's what you got to do with all the politics happening here and all the new appointments. And we don't know what the world's attitude is going to be either with the world leaders. It was the first election in 2016, very adversarial right off the bat. You could not work with Trump. You were like part of the bad guys if you did. So right away, the trade deals weren't good. I mean, at all. Like, it was trade war, right? Fairly quickly. That's another thing we don't know. How are they going to react? Are they going to be more on board with working with them right away and there won't be a lot of issues? Or is it going to go right back the way it was in 2016? No one knows. Meal's the only one that seems genuinely worried about everything. That's a really low price. Is there opportunity there? I don't know that I'm convinced that Meal's usually the right one, not the wrong one, like the leader, or what, kind of telling you what's going to happen. But back to the politics, there's so much going on with policy. Is it just a policy spread? A lot of people seem to think so. Long oil, short meal. And are they unwinding that now? I don't know. The more I talk, the more confused I get.
Well, I think, it was probably only 2 weeks ago that you were bullish corn. You were a corn bull.
Watch that.
You were a corn bull for like 5 minutes there, and I feel like maybe you still are, and you're just struggling with your feelings here. And
because
maybe
I know what's out there, and there's piles of it and piles of it, and everybody's got the same exact plan. Just store it and hope that it gets better. It never works when people do that. I mean, the weather is usually what bails them out. Just store it and ignore it. So yeah, but the spreads are definitely saying they're worried. Not only are they worried about corn, they're worried about running out, getting awfully tight by next spring. Then you just look at and you listen to what people have and what was left over from last year, and like not all the pieces of the puzzle fit here. So the only thing I can think is just this outstanding short-term demand, which is probably ultimately bearish, but we don't know. Front-loaded market. And you just got a little tailwind with the funds buying 450,000 contracts for a month and a half in a row.
Well, that's another thing to look at, though. I mean, typically when you see that many contracts go through, I would have expected the jump to be bigger than it actually
was. And the
was.
reason why you didn't this year is because there's so many physical bushels exchanged in the contracts. So they basically exchanged with the commercials, the longs. The funds took the long, and the commercial is going to be on the short side of stuff. Whether that's bullish or bearish, that's debatable. This time of year, I don't think it's uncommon, and that's why you didn't see it move. There's a lot of willing sellers at lower prices, so that they don't keep pulling their offers, or they want to sell into this. And they are saying something's changing, and that's their bet. Everybody thinks these funds are magical and they know everything. They actually don't. They don't call each other. They follow. They end up tripping each other's trigger. 2020 would be the only time that it seemed like they did have that bad phone. And it rang at the lows in August on that report when it said 3 billion bushels. And they bought nonstop aggressively when nobody else would in the entire world. And they were 100% right, and they made a lot of money, every one of them. Other than that, they get in, they get long. A lot of them stay too long and end up losing a lot of money, and vice versa. They go short, stay short way too long, end up losing a lot of money. The guys first in early make money and out early make money, and the rest of them don't. They don't have a great track record in grains that I've seen, except for 2020 when they seem to know exactly what to do by some mysterious force. But they timed that perfectly, and that's the only time I've ever seen it work. So a lot of people argue they must know something we don't know. That's usually not the case. They were just short 350,000. What made them change their mind? I think they just are tripping each other's trigger, getting out, and they're net aggressively net long. There's no in-between gear, apparently. It's just straight bearish or straight bullish. Before, they used to kind of battle back and forth, and it's just very directional on corn lately.
So if I don't have a plan for 2025, what am I doing? Just sit and wait?
So far, that hasn't helped you, and so far, that hasn't hurt you. You know what I mean? A lot of guys, they're comfortable with just going out and just marketing that crop, and obviously, they would be at a profitable level, hopefully, for them. What is it, 440-something? That's, for me, this is where I really differ with a lot of people. I want to see as much South American weather as possible before I commit to that price. I want to see what the trade war stuff's going to happen. But, again, you have a lot of risk. So I'd rather do that in-between strategy where you have some upside, but you have your downside covered. But that's just me. So far, that's not working on paper, but it's working for your physical bushels. It'll come along on paper, too. It'll all even out in the end. But the answer is, it's really done you no good if you have. It's the same prices, and it's likely to say they're structured very oddly. I don't think the market thinks we need a bunch of corn acres next year. But then the front saying, yeah, we're July into December saying we're going to be super tight by spring. So then that would mean December 25 is very wrong and it needs to come up a lot to get the acres. Again, we keep on circling what we've been talking about. No one seems to know much of anything or why what's doing what for whatever reason. I mean, it's one of the toughest markets I've ever seen. I really thought the election would make it clear. I don't think so at all. I think it could do anything tomorrow. What are your takes on the way that it's been trading since the election?
Yeah, I think initially everything was bullish because everything was like the stock market was bullish.
Yeah, just rising tide floats all boats.
Everyone's buying. I think now we're seeing the real thought put into it, and I don't know what that reaction's going to be. I mean, were beans up 25 yesterday and down 17 today? Hey, go.
Yep, wheat's been tough.
Wheat's been real tough. I was watching meal. I was watching oats. I think oats is an interesting market right now.
Yeah.
What's it? Do I want to buy it here? No, but it sure looks interesting. So I agree with you. It's super hard trade because there's no clarity in direction at all, and it's really. I feel like all the markets almost are at equilibrium where they really could go either way too.
Yep.
Like there's a lot of fire to go either way.
Then throw oil in there too. Oil's been going down since he's been elected with the idea that we're going to pump more on day one, which isn't really true at all. The production's been record breaking, Now the policy and the regulations, though, that's where they are going to see the huge benefits, and that will change things. But I think we talked about earlier today. Does this happen overnight? No, and we've seen this in 2016. It takes a while for this to all to trickle down, a long time. So is oil overreacting to the downside? I don't know. I have no. It seems like you say equilibrium price. Seems comfortable in here. It seems like the right price for it. But again, we'll wake up tomorrow, and the trade winds will be blowing whatever direction they are. There'll be some hot headline. So I just really sometimes you just take the market day by day. And that's what I'm going to do. I don't know how else you could trade it. Guys are jumping in and out of stuff a little more than normal, but also the phones are very quiet. I think you just have a lot of confusion out there. Everyone want to see who got elected, but now that it is, I still thought afterwards, I thought I'd get a lot of phone calls, but I'm not. It's been very quiet, whether everybody's just wrapping up everything around here for harvest and other spots. It sounds like everybody's busy every time I call them on the phone.
Yeah.
Or they talk to them. I think just people are really busy. But they're going to come to these markets and have no idea what to do for marketings with no plan. And I don't know how you plan around what's going on right now.
I think right now, yes, the marketing, the hedging side of the market is pretty, I don't want to say impossible, because there's definitely protect your downside if you don't have anything on. There's something you can do, but be flexible with that too. I think from a speculation side, I think we're going to see opportunity. Like I'm searching out the mispriced markets. What is there? I'm not ready to pull the trigger on some of the ones I see because what might look mispriced over the past year might not be with different sentiment going into the next year.
Yeah, I guess I got my eye on the dollar index and the oil for that inflation buy. Like if everything's just going to be highly inflationary and they're just going to buy it across the board, you're not going to see the dollar going straight up. You're not going to see oil going straight down. So, and then you got gold and silver going down. So it looks like, is the inflation trade over in commodities? Should it have ever been there? That's another thing. If there's a supply, the price shouldn't be going higher. But commodities like to be like, everything's going to go higher in the super cycle, and then all of a sudden things get more expensive and people buy less of it, and then it falls. That's commodities. So the inflationary buying usually doesn't work, and I think we might have just saw some of that in wheat. Wheat's right back to reality. Like, we're not moving very much, but better than the last couple of years, still not moving enough to change the needle. Corn, had an okay report on Friday. It's still 1.93. I mean, what were we, 1.95 last year? And that's with all this outstanding demand. Problem is they had a lot of it factored in. We're not even hardly running ahead of the USDA's numbers, 30 million bushels or something. And then the beans, all bets are off there. I mean, what is going to be the demand going forward with China? And then I still think, though, in 7 weeks from now, that the South American weather is going to be all anybody's trading. Like, if it's as good as it is right now, I just don't see how these grains are climbing unless there's some trade story that we don't know yet. Because that is going to be huge headwinds for this stuff. Especially if the funds are long going into that. Because of the sheer amount they planted this year. It's not a small amount. I mean, it's substantially more than last year. Last year wasn't a very good year at all, and still came up with a lot, if not a record, and this year is looking to add on that pile. But the difference between this year and last year is the weather is leaps and bounds better already. Like, it was exceedingly dry in November last year and December, and it only started raining in January, where we are perfect. They were a little worried in, when was that, September? You remember I was making fun of that?
Yeah.
That was a little ridiculous with the dryness there, and now the rain's come. So if that pattern stays that way, I just don't see how we climb sharply with that much more grain around the world.
I don't think this is necessarily a short-term thing, but I am curious as far as Ukraine goes, if things settle out there.
Throw that in the pile. That was super unpredictable.
Yeah.
That was highly bullish for years, the whole situation. It could flare up at any time. That actually might go into a very calm state where production goes through the roof for the Ukrainian corn and back to normal for all the categories there, and no tensions. Or it might not. Maybe not. It's not going to work out at all and intensifies. But again, throw that in the pile of absolutely things we don't know. That we're going to find out in the days ahead, and
so why do you say these markets are hard to trade, John?
It's this week takes the cake. I mean, I am struggling pretty much trying to figure out. Look, even cattle. Cattle's got a lot of good stuff going on. I still think it's I have a whole bunch of feed sitting around. I'm going to put it in something, and they go to the sale barn and buy it. Like, I think there's a lot of fringe buying that wouldn't normally happen. At the same time, there's not a lot of cattle around. At the same time, people feel richer now after the election, which is going to be a very temporary feeling in my opinion. Like, it's not going to put more money in their pocketbook overnight. So is beef demand going to stay in there? And the most troubling thing with the cattle is all those new open interests at the top of the market. We're still $3 away from where all those people added all that stuff. So when they open a contract, that's one open interest, one buyer, one seller. So at the top, a lot of new contracts got opened. That's not a strong hand at all to have when you have bought a high price and you're underwater immediately, and there's a lot of you. So cattle's a really tough market too. I mean, it's got the fundamentals to keep going short term, but longer term, I mean, gravity's heavy there. I am definitely looking at hedge strategy there, and I have been. And I think that's going to be important too. But the whole recap for this is going to be incredibly hard for people to navigate. And anybody lying to you or saying that they know is lying to you. It's going to be a day by day deal, and that's the way I'm going to trade for right now.
I think the most interesting thing in cattle is that still the curve is pretty flat.
Yeah.
It's kind of moved a little, but it's still pretty flat.
The spread's been tough in everything. I mean, just to predict, you have the front of cattle has been way under the back end of cattle on a big giant surge. So in other words, they've been buying the December 25 cattle contract on back, or or October 20. For some reason, it was stuck at 78, and all of a sudden we're at 183, and we're at 183. So it's almost stronger than the front, which is in the middle of a bull market and as tight as we're going to see it. So try to make sense of that. You really can't. I don't know what's going on there, and the money flow there seems to be a lot of buying in the back end on inflation again. Right. So you're seeing that, but you're definitely not seeing that in corn.
Right.
December 25 couldn't be weaker. Like, they sell that every single day, and it's the weakest contract by far. So that's definitely not happening in that market. No correlations at all that make any sense. And I think if you ask very weathered traders in this market, they're probably adopting my attitude day by day. There's still plenty of opportunities. Just you can't fall in love with anything.
Yeah. One thing we did talk about a few episodes ago too, that is of interest to me to start watching a little more now, is the interest rates.
Yeah.
Do you have any thoughts on those or?
Yeah, I just had a client text me just before we started this. He wants to know, is there any way to hedge that stuff in? So that'll be my next call. I'll talk about it. Yes, there is. Definitely a way to hedge short-term rates in that's heavily used every single day by every financial institution across America and the world, really. Deeply liquid short-term rate markets. Then you have your longer-term rates, which 10 years is what the mortgage rate goes off of, even though the 30-year bond is what everybody thinks it goes off. It's the 10-year note. The back end 10-year on back has been going straight up. So we're back up to those old mortgage highs, which puts all that bad debt on the bank's books that they had from those bonds right back to the worst it's looked. So that's going to strain the banking system again, even though those aren't realized losses, nor would they be if they held them to maturity. They wouldn't, but in the short term, they're definitely heavy losses because the bond prices have gone up substantially, or down substantially since they bottomed. Bond prices go down, yields go up, so they move inverse. So that's been a weird structure too. The Fed's been aggressively cutting short-term rates. That doesn't appear to be working even very good at all either, and it certainly hasn't worked on the back end. That's gone the exact opposite direction that you would have predicted them when they cut rates. They don't control the back end, they only control the front end, but they've not done a very good job at controlling anything right now. So I don't know what it means. Just another mysterious market that we have to try to figure out as well. But I do like the interest rate stuff. So that if that interests you, definitely give me a call. There's a lot of stuff going on there every day.
Absolutely. Well, anything else you want to add this week, John?
I feel like we probably triggered more questions than we answered, but that's the markets we're in. And if you have any clear ideas on what we're talking about, but you know the answer, fire us an email, call us, let us know
the answers.
Hey, this is what's going to happen in Mexico. I know this president pretty well. Like, if you have anything, let me know, because everybody's just throwing haymakers right now, trying to figure stuff out, and very hard to navigate. And hopefully it gets easier. It always cycles. I mean, it'll get from this.
It will smooth out, and it might even be by next week. You never know.
Yep. So as hard as this looks right now, it might become a lot easier in the days ahead. So if you thought you were confused and you didn't know what to do with your grains, you're actually right on the money this year. That is the rare right answer. Do nothing but wait and see a little bit more. You don't get this oftentimes. But I also feel like a few different things will tip it exceedingly bearish, like you can't believe it. South American weather, trade stuff, front-loaded, whether that's or not. But on the other hand, I could see it going sharply higher in the short term, too, on a number of different things. That might not make sense, but it could easily happen that way, too, which makes it a very difficult market. So just like I say, take it day by day, try to figure it out, and it will become clear here soon.
Hopefully.
And if not, We'll hedge. We'll have some sort of hedge on that'll be for non-clarity, the non-clarity hedge. Which often it is.
It is, and that's why you always talk about you're hedging with your upside open. There's ways to do that.
There is. I really favor that way. It doesn't mean there's no margins. Sometimes a lot of times there isn't with just a straight put, but this is the kind of stuff I'm talking about. Like, if you want to get, even if you, let's just say you're worried about the South America weather staying good. So, for example, you could buy a soybean put after this rally saying, hey, even though this is a March put, I'm only going to use it for 4 weeks to see the next 4 to 5 weeks of weather. Then I'm going to decide what I want to do with my beans. So what you've done here is you basically hedged a hedge. You got it in the bin, and you're buying a put on it to see the South American weather with the idea if it shifts, it's going higher and you'll get rid of the put. And if it doesn't shift, well, you got your protection on. That's a really basic, dumbed-down version of what I'm talking about. Just buying time more than you need, but using it for just a little time window that's going to be critical to price direction.
Yeah, and we wouldn't say do that for 100% of your crop.
No, nor am I doing it for anybody's right now, because the market is down 25 cents. The next thing you know, it's up 25 cents. Like, it's impossible to even get that stuff on, short of the guy calling right exactly at the right time.
Yep, makes sense.
So yeah, just look for, just keep an open mind and try to figure out what pick in the cabinet is going to mean what for what market. That's what we're doing right now, which makes it really hard.
Yeah.
And then it depends on what article you read. One article will say this new EPA guy, they're going to start dumping pure poison back in the rivers on day one. The next guy's like, no, he's pretty friendly. Here's the thing. It's like the news doesn't help because it's so politically biased on both sides that it's really hard to get a read on what these people are going to do. Obviously, he's putting them in there for his vision, so I'd go with whatever they laid out for their energy outlook and try to trade that way, which is, short oil in the short term at least.
Right.
With higher production, of course.
Yeah. Or not.
Yeah, you don't snap your fingers. You don't just snap your fingers and get $1.50 at the pumps. It just doesn't work that way.
Yeah.
People love to think that it does in politics, but if you look at the production, you'll notice that we've been producing more than ever. Now, I'm not saying that the Biden's policies wouldn't eventually make a much higher oil price. I think that's the argument that a lot of people would make. But in the short term, people want things to be really political in commodities, and oftentimes they're not. Like, it's going to go with supply and demand. But I think that's where maybe we're having a hard time is it is trading really political right now, which will make no sense at all for the markets. And that's why they probably are really hard right now, is they're trying to figure it all out in one or 2 days, and they won't be able to.
Yeah. What seems one way today is going to seem a different way tomorrow.
And you saw that on the election night with beans. Went straight down with the idea that we're headed to this trade war. Then they realized, hey, wait a minute, that's months away, if at all. And hey, maybe they're going to ban used cooking oil out of China, and that's wildly bullish. So they went from being a bear to bull in 10 hours. And that's the way the markets have been trading, just like that, changing their minds very frequently during the day.
Yeah. Makes sense. Well, if people have questions or they think they know the answers and want to let you know what they are.
Yeah, no political hot takes. I don't want any of those. I've had enough of those that'll last forever.
No politics.
So no. But if you have anything interesting that you think is going to happen, we'd like to hear about it. Just give us a call at 218-731-1578.
Thanks, John.
Yep. And I'm not saying they're smarter than everybody else at all. No.
And that's the podcast, folks. We're all done.
Yeah.